Hi, everyone. We've already dealt with the elements of financial statements, including a balance sheet, a statement of profit or loss, statement of changes in equity, and also disclosures under Ind AS 1, which is presentation of financial statements. You would recollect we also talked about briefly about the statement of cash flows as a part of the element of those financial statements, but categorically, because of the relevance that this topic carries, there is a separate standard in Ind AS 7, which is identified, which is built to discuss the cash flows or the statement of cash flows for the users, right? And that's the reason why it is it is being dealt separately because of its relevance, because of its importance, right? You would recollect when we talked about balance sheet, we referred to the word, what is the position of the company? What is the financial health of the company, right? How many assets, liabilities, equity it carries. We talked about, of course, statement of profit or loss, where we talked about, of course, the performance of the business, right? What are the sales? What are the expenses? What is the profitability of the company at large, right? But neither of the two, neither the balance sheet nor the statement of profit or loss actually refers to the liquidity of the business. And that is where the word cash flow or the statement of cash flows drives its significance. Okay. Where the money is coming from, right? Where the money is being spent is not covered by either of the two primary sets of financial statements, like the balance sheet and, of course, the statement of profit or loss. And that is where the statement of cash flows has its own significance, has its own relevance there, right? Very briefly, you would also want to recollect your understanding on AS3, which is cash flow statements. The statement of cash flows in AS7 is pretty much the same with very limited, very little differences, right, with AS3 per se. So it's basically a refresh of your knowledge of what you have already understood under AS3, right? And that is something which we want to kind of talk about as a part of this particular discussion. Okay. Now, this standard categorically talks about some specific terms, more focus on the word cash equivalents and the types of activities predominantly operating, investing, and financing, right? So our focus would be to not just talk about the meaning of these terminologies, but also looking at how to differentiate what kind of cash flows would fall under operating, investing, or financing, right? So we'll be spending some time on that discussions as well. What are the components of cash and cash equivalents? So it is pretty much in lines with the terminologies. We want to discuss that as well. And finally, what are the disclosure requirements with regard to the statement of cash flows? Okay, you would probably recollect that there are two ways of preparing the statement of cash flows. One is the direct method, and second is the indirect method. So we'll be discussing those as well, as a part of this discussion there. Okay, let's do one thing. Let's take a step back and try to understand how does a business work, right? And why probably this particular standard would have a relevance in terms of looking at, talking about the significance of all these terminologies called as operating, financing, or investing. Okay, think about it like this. You start a business, right? So you put your money, right? Or let's say, a bank loan, for example, right? Or maybe a combination of both. Okay, so you look at both the things and get an answer on that. So it's your money, or let's say the bank loan. So in a way, you are saying that you are financing the business, right? You're funding the business. Okay. Now, essentially, your idea of funding the business is normally to invest in assets, invest in long-term assets, right? For example, it could be towards machinery, or let's say plant, or land and building, etc. Okay, so in a way, what you're doing is you're bringing those funds, you're financing the business, you're funding the business to invest in non-current assets. Okay, you're funding the business to invest in non-current assets, right? And now you are using those non-current assets to create stuff like inventories. You would have, of course, your sales taking place. You would have your, OPEX or expenses taking place. You would have your receivables and payables, for example, right? So this cycle, for example, is meant to bring the thought process of that you fund your business, you invest in long-term assets or non-current assets, and then you have or use your assets, use those non-current assets, you operate those assets to create wealth for the business, to create cash from the operations. Okay, so and those operations are expected to, let's say, be used to run the business or expand that business. The expansion could be a key there. Okay, and this continues, by the way. You have some cash coming in from the operations, you would further reinvest in other assets, and again those assets would be again used for operations, etc. And let's say if you were also putting your money, so in a way this particular cash from operations would be used to repay, return back money to the the shareholders in form of dividends, and you would of course repay your loan, you would also pay the interest, etc. And this keeps on continuing, this keeps on going as a business. That's something which is a general way, for example, a business operates, right? Now what is the statement of cash flows doing there, right? The statement of cash flows suggests whether you are really creating a cash in form of bringing more money in the name of financing or funding, or you are returning some money back to those, let's say, lenders of money, maybe a banker or maybe yourself as an owner, as a shareholder, right? So we talk about those kind of activities referred to as financing activities. Okay, similarly, you're also trying to address with the help of statement of cash flows whether you are putting money, so is there a cash going out in terms of purchasing new assets, purchasing new licenses, for example, purchasing another company in form of a goodwill or an acquisition of a business, right? Or are you selling those assets, for example, so resulting in a positive cash flows, right? Or is it precisely that your operations are resulting in a positive cash or a negative cash? So the shareholders and the users of financial statements would be really interested in knowing whether your cash is coming or going in form of financing, your cash is coming or going in form of investing, or your cash is coming or going in form of operations, right? And to what extent is your business kind of creating cash in the name of financing or investing, or let's say operations? And that's where the need of Ind AS 7 in form of statement of cash flows arises. All right, and that is the whole objective of defining or bifurcating your cash flows. If I take a step back, the idea of cash flows, it needs to be bifurcated in terms of operating, investing, or financing, right? So what we want to discuss, what we're gonna learn as a part of this particular entire discussion is what are those activities through which the cash is generated or cash is spent. And there are primarily three categories: 1, 2, and 3 is operating, investing, and financing respectively. Okay, so effectively what are we saying? By the way, just to conclude the discussion, we would have an opening cash, right? We would have a closing cash, and there would be movements in that, right? So whether these movements, the pluses or minuses or the changes are arising due to operating activities or investing or financing activities is something we are going to do. So in a way, we are talking about a reconciliation of your cash balance. The movement in the cash, whether it comes in form of an operating cash or investing, or let's say from financing. All right.